We delivered a very solid Q1. We met revenue, we beat on EPS. We gave a outlook for first half to second half, a much stronger second half outlook, as we saw with growth across every business forecast for the second half. And somewhat like the market indicates, maybe a little bit of market weakness in the first half of the year. So we're working through that.
That was Intel CEO Pat Gelsinger speaking to John Fort. The chipmaker reported mixed results and offered a weak guidance now for the second quarter. I want to bring in Wolfe Research senior analyst Chris Caso. So for some analysis on this whole situation, because you look at the stock and it has been an underperformer. Maybe that's putting it politely, Chris.
Yes, and we have an underperform rating on the stock. For the quarter itself, there is some weakness here in the first half of the year. We've gone through the inventory correction that we had last year, but just the end markets haven't come back as strongly as perhaps Intel would have hoped in both the server and the PC side. And there is some gross margin pressure as well. But really, I think what's really important for the stock is something they said at the beginning of the month when they gave some details about the manufacturing business. And the disappointment there was that the manufacturing part of the business wouldn't get to break even until 2027. And that's a lot longer than people had hoped for. What's happened here is that Pat Gelsinger has done a very good job in fixing Intel's manufacturing. The problem is that comes at enormous cost. And, what's happened in the 4 years since they started this is the market's changed. And the change was obviously AI. And Intel's not participating fully in that. And the rest of Intel's markets, such as the traditional CPU server business, just isn't growing fast enough to cover the massive manufacturing costs.
And so, Chris, I think there's two questions. One is, will it ever grow fast enough, or is the need for even faster chips going to make those chips that they're making effectively obsolete? And the investments that Pat Gelsinger is making today, do you think they ultimately actually will pay off, or that somebody else is already going to leapfrog them again?
Well, there's still going to be growth in the traditional server market, just not as much growth as there has in the past, because more of that money is flowing to AI and GPUs and specifically NVIDIA. What they hope now is that the other business they're putting on top of this is a foundry business where they would compete with TSMC. And it's far out in time. That's kind of, 27, 28 before that business really gets going. It's very uncertain. TSMC is a very strong competitor. And, when they started this journey, the foundry business, at least from an investor standpoint, was looked at to be optionality. It's not optionality anymore. That's what's needed to drive profitability for Intel.
So what do you think this company should be worth? Stock right now trading at $32.46.
Yeah. So our price target now is $29. What in some of those disclosures they made at the beginning of the year, the metrics they provided, gave you, the hope for, somewhere in the range of $4 of earnings, but, kind of far out in time. I think it's sort of a 27, 28 event right now. For right now, our preference is, for some of the faster growing parts of the market, NVIDIA, AMD, Micron and memory, where they're fully participating in AI right now. And the problem you have also with semiconductors is it's a cyclical business. So by the time you get to potentially the payoff on Intel in 27, 28, we could be going through another industry downturn. So our view is, it's a stock that we take another look at, after we're through this cycle, perhaps into the next cycle.
In terms of, finally, just real quick, stack rank, if you will, the chip stocks or the chip companies on our screen. We got Intel, NVIDIA, Qualcomm, and Advanced Micro. I don't know who else you want to throw in that mix. If you were to stack rank them in terms of how you'd want to own them or not, tell the viewers.
Right. So NVIDIA is our top pick. It's been our top pick for a while for obvious reasons. We think there's a lot of legs to go in AI. We like AMD as well. We think AMD is the number 2 to NVIDIA, just like they've been number 2 to Intel for a long, long time. We like Qualcomm also on, the prospect of a handset recovery. But, what I put even higher on that is, again, AI-related names such as Micron that for memory, and then the semi-cap equipment companies like Applied Materials that provides the equipment for that.